All right, so let me just begin. So I'm in the office with the one and only Kyle Ernst from Stonehaven, our favorite go-to, the best lenders in the game, period. But let me back off. Kyle, give the people what they want. Who are you?
Thanks, Greg.
No problem.
Happy to be here.
Yeah.
Kyle Ernst, owner of Stonehaven Mortgage. What else am we talking about?
I don't know. Just like tell the people why you're the greatest lender since sliced bread was invented.
Kyle Ernst here from Stonehaven Mortgage. We're a boutique mortgage bank located in Elmhurst, Illinois. Been in business for 12 years now. I've been personally in business for about 21 years. And we're just kind of in a fast-paced growing environment in our company. And we're here to kind of spread the love and let everybody know what's going on in the market.
I mean, two boutique brokerage owners, right? We are very kind of cut from the same cloth when it comes to the way we do business. You guys are scrappy in regards to like getting deals done. Like you guys are solution-oriented people, right? And that's why we love working with you guys.
Absolutely.
So today we're going to be talking about some fun topics, and we would love to get your opinion from the lender's perspective. So Ray, what's our first topic?
Yeah, so I think the first topic that we should talk about, let's kind of dive deeper into first-time home buyers.
Okay.
What are the things you guys look for to help approve them for a loan? What do they need
Cool.
to have to give to you? Pre-approvals,
Yeah.
why it's important for them?
Yeah, so because a massive portion of Vesta's business is first-time home buyers, right? I guess, speak to first-time home buyers on preparedness, what they got to be thinking about. This will be the first time that they talk to or just do anything with home buying. So I guess, what are your thoughts on that?
Yeah, obviously have your financial documents like prepared, like your W-2s and your assets, where your money is located at. Because a lot of people, they have different kind of plans and they don't really know because it's a 401k and they have a brokerage account. But get that all aligned so like when you're calling a loan officer, you know exactly what your financial status is. Yeah. But also, regards to your income is, are you salaried? Are you hourly? Are you commissioned? Kind of know the basics of what you have to kind of, give us a good summary of your story about, income and obviously your assets as well. And I think for first-time home buyers, the main thing that we see a lot of people struggle with is they know that they can put down, or they've heard that you can put down minimum 3% down for a conventional loan, which is true, but they forget like on top of the 3%, oh wait, there's closing costs associated with that. So they never factored that in. So all of a sudden it's like, oh, they have their 15 grand that they've been saving, they're ready to go. But what's this other, $10,000 that, they weren't made aware of? So I think like, having them talk to us for the pre-approval process and doing that, we kind of educate them on that. But that's one of the main things that first-time home buyers don't realize is that there are other costs involved in a purchase transaction when buying a property.
True or false? I think that for anybody that's looking to buy and start the process, it's almost more important that they talk to the lender before the broker.
100%.
Why do you think that?
They have no idea what they can be approved for.
Right.
They don't understand that their student loans that they don't pay anything on actually has a factor in what they can afford as a mortgage payment. They don't understand that there's association fees involved with condos, and that can vary. It could be as little as $300 a month. It could be $1,000 a month for the exact same price point. It's a huge difference in their monthly payment and what they can qualify for. So I think that the more that they talk to a lender first will save everybody time and frustrations that come up now if they talk to a realtor first and then do that process before talking to us.
So, and I'm just gonna like kind of top of mind, like I'm really thinking of some good stuff here. So, I always talk about for if somebody's trying to start looking for the right help, obviously like go to your references, like your referrals, like people that like trusted entities, but a lot of people don't have that, right? Yeah. When it comes to like looking for brokers, it could be in my opinion, a terrible experience if you go on and try to find a broker. There's just so much, I think, misinformation. All brokers, did you know that all brokers are number one?
All of them.
We're all number one somehow.
100%.
It's incredible. So it's, but but like everything is about marketing and trying to get and then paying for leads, right? Same thing for lenders, though. I feel like that if they go to Lending Tree and they like request a quote, you're gonna get your phone is gonna melt from the calls. Right. So how can somebody avoid that, and how can they find a lender that they can be comfortable with and have that conversation that they're not gonna get sold, but given good information and educated?
Yeah, you're 100% correct. Yeah. People that, and mostly for first-time home buyers that haven't gone through the process and don't have a relationship, a lot of them have gotten their information through, Google and through going through different lead sources. And all of a sudden, you're right, there's a bank out in Iowa that they're talking to with one person that works the mortgage platform, and they're buying in Chicago, and they have no idea all the fees involved and all the transfer stamps and how that kind of works. So I think when in this business, a client needs to feel that they're comfortable with the person that they're working with. Mm-hmm. And I think once you start to talk to that individual loan officer at any bank, if they have a confidence that they know what they're talking about with, questions that they ask, they're not saying, oh, well, I'll get back to you on that later today. Like if they know exactly, they can rapid fire answers back with confidence, like that is like a good start. So I think don't talk about rates or anything like that, because that will come, is get a good general idea of who you want to work with. And maybe that can narrow it down from 7 to like 2.
Yeah.
So
in my opinion, there's 3 classes or places you can go find and to speak to a lender. There's big banks, Chase, Bank of America. Don't go to Bank of America, but Chase. There's the local community banks, right? So here we have like Lakeside, right? Like, and then we have mortgage brokers, right? Like people that like you that own brokerage and that you service a lot of different types of loans, but they all operate a little differently. Can you just give like a snapshot, and if there's a better person to talk to in different situations?
Yeah, so you're correct. First and foremost, people always go to banks.
That's
right?
That's where their bank accounts.
It's banks.
Right?
It's where the deposits go. It's the safe, automatic go-to. Banks aren't the retail banks. Yeah. The retail banks aren't mortgage specialists.
Right. That's a great way to put
it. They
it.
do mortgages because they're in the banking industry.
Yep.
And they give loans, so they have to, and they have built out departments, but their process flow on how they do mortgages is a lot different from a mortgage banking lender like us, where all we are devoted to is mortgages, and that's all that we do. We don't deal with deposits and student loans and all that stuff. So there's no cross-collateralizing between, different areas. It's just we're focused. So that's why, turn times for us versus like the retail banks is like it's night and day. So it's also so I think having a bank is a good first step, just to get a general idea of where rates are at that they have that they're with, but then obviously definitely should go to see a mortgage banking entity like us or a broker as well. So there's kind of 3 different kinds of lenders or people in the mortgage business. There's your banks.
Yep.
There's your brokers who have other different lenders underwrite their loans, so they don't have control. It's nothing in-house, but they kind of shop around for you. And then you have mortgage banks who have the benefits of all the investors that exist in the marketplace, and they have direct access to Fannie and Freddie and whatnot. And that's kind of like how we are set up. So we have the best of both worlds. A lot of times people also are not educated when it comes to, Bank of America, I have my checking and savings there. They're going to keep my mortgage and they're going to service my mortgage. I want my loan to be with Bank of America. Yeah. I trust them. Unbeknown to them is Bank of America, they don't own their loan. 80% of the loans that exist out there, the investor is Fannie Mae and Freddie Mac.
Which is the government entity, right?
Exactly. So everybody's going to the same place. So the servicing side of things is, yes, Bank of America will service it, but they're not the ones who are actually investing in your loan. It's actually Fannie Mae or Freddie Mac.
So in my experience, right, and this is like being part of this process for years upon years, I'd say the biggest determining factor outside of just relationship, right? Yeah. At the end of the day, try to call your loan officer at any big bank at any point in time after 5 o'clock. or during the weekend.
Yeah.
It ain't happening. And if you're in a multiple bid situation, best and final is due on Sunday evening, and all you did was go to your local bank and you didn't know that you were going to find a place over the weekend, and you did, you're out of luck because you're not going to get that you might not even get it on Monday because there's a super long turnaround time. So when it comes to relationship being accessible and the quick turnaround time, I mean, that is why we work with you guys, right? Outside of all the other stuff, servicing. When I call you, right? We just had a situation. The past 2 weekends, I had a multiple offer situation. I was like, we got to get it in now. And it was like, the perfect time of 7 p.m. on a Sunday, right?
Right.
You don't want to get that call, but you still pick it. You're like, all right, God damn it, Greg. But at the end of the day, it's like, that's what keeps the business going. And that's the biggest thing that people don't understand is that to win in a high competitive market is you need to have as many resources and ability to beat out the competition. That is quickness, and that is having the resources at hand to be able to empower your offer. So that is one of the main things that people miss on.
Yeah. Yeah, you're absolutely right, especially right now. I mean, we, on a monthly basis for the past 4 to 5 months, are having over 200 pre-approvals a month.
Wow.
Over 200 over the past 6 months. People are ready to buy.
Yeah, they are.
Inventory, hopefully, should be coming on the market more and more.
Yeah.
Yeah. No?
Not
Okay.
It's gonna still way under.
It's going to be
underwhelm
slow.
the demand.
So that just makes it more important
Right.
that Saturday something comes on, you got to have a guy that's ready to get that updated pre-approval, talk with that listing agent, let them know that they're strong, and get that deal done immediately. Because if you have to wait until Monday, deal's gone.
Yeah. Because by the way, one of the things that people don't discuss is that when you do put the offer in, right, a good listing agent, like we're great listing agents. And what we do is we protect our seller. The way we do that is we verify information.
Yeah.
The only way I can verify information is talking directly to the lender that is on the pre-approval. And I've chosen other offers because it is a Sunday and I cannot get through to the lender, but the other lender was like already on the phone, good to go. They're good. They're verified. I like this. This is what I want to work with. And I go with that buyer.
Yeah.
It's all about strength and the team that you use and the resources that you have at hand. All right, Ray, next.
Was that one question?
That was all the things.
Let's talk a little bit about first-time homebuyer programs. Grants they can get money because people love money.
That's a really, really good point. And I actually am personally I don't have the best resource and understanding of what grants are out there.
Yeah.
First-time home buyers have a lot of options when it comes to because we want them to be buyers. We want the American economy only exists if people become homeowners, right? So the American dream. So can you go over what programs exist, how if they can search for that stuff, all of that?
Yeah, it is confusing. Mm-hmm. There are
almost like on purpose, I feel.
Yeah,
it's like, oh yeah, we got grants.
The problem with all these programs that come into the marketplace, they're there, and then 2 months later, they're gone. So by the time people are getting information about them, or if it's a client from 4 months ago that a program existed, and now it doesn't, well, now their whole strategy has changed.
Because it's like a pool of cash, and once the cash is gone. It's
correct. So a grant, usually at retail banks, they have funds allocated to help first-time home buyers, and once that money runs out, it's gone.
Yeah.
So there's grants where people can get up to $7,500 in cash for.
That's pretty great, man. For a $300,000 buyer, that could cover your closing costs.
However, there's always caveats to that. It's always where do you live now? Where are you moving to? How much do you make now? Do you make too much money?
It's the income thing, is a lot of people don't realize.
Yeah, the income threshold is what kind of the people that have great income, high credit, all of a sudden they're getting penalized because they can't get in the grant program. Which, okay, fair enough. They have their money and they probably save for a long time. But people that
that's a penalization. It's not like if I have money, I want to spend it.
Right. So
it's a bullshit, Kyle.
It's there's programs out there where
it's like he's not doing it.
Right. You get money, but then it could be a lien on your property. Yeah. So I got this $7,500 and that's great. And then rates drop in 10 months. You want to refinance to save monthly. You're like, oh wait, I got to pay that money back. So there's a lot of confusion and not that they're pushed by their lender to that specific product, but a lot of times you got to read in between the lines to see exactly what you're getting, because it's not just about this transaction. It's about what's going to happen in the future. And it, as far as right now, like we know eventually rates are coming down. Like you don't want to be stuck where you can't take advantage of that.
Is there any way to find out where if you get like a really good, I'm going into this because there's a company that shall be unnamed, but it sounds like a rocket ship. They are fantastic at giving people really great upfront, like we'll beat everybody out.
Correct.
But then they bake in the costs
100%.
for the most part behind the scenes on like the higher interest rates, or like these are like new fees that all of a sudden popped up. Like how can people protect themselves?
I think it goes back to just talking with your realtor that can give you their referral partners that they give to, because you're right. The online conglomerates out there, and if you search online, all that people do are look at rates. It's almost like the last thing you should be looking at.
Okay, that's a really good concept.
And if they hear the rate and they're like, oh, I'm going with this lender because they're offering 5.875. And like, okay, well, the market's at like 6.875.
Right.
And then all of a sudden they get under contract and they're signing documents. 50% of the time, they don't even know what they're signing.
Right.
And all of a sudden it's like, wait a minute, I'm paying an extra $14,000 in points to get this rate.
Right.
Doesn't make any sense.
Right.
So yeah, it's hard. So if those clients can get to an honest, lender that kind of gives them an option, doesn't push them to that rate that everybody is just concentrating on.
But isn't there and wasn't there something passed called Truth in Lending, right, where lenders have to give you everything up front in regards to their entire rate sheet, everything that you're getting? Is that still something that you have to provide?
They have to. Once you start getting into talking rates, you have to disclose that to them. Unfortunately, even with that, you see it's an estimate. It's a fee summary sheet. It's with asterisk marks, like subject to change in 30 seconds when you say, I want to do it.
So that's how they're getting around it.
Yeah.
Got it.
It's always subject to change.
Because it's like the whole thing was like, I get that, and then compare between each other, but it's like you're still getting things last minute whipped around that like you're like, wait, what they got? And then you're already too far down the line, and then what are you going to cancel the deal?
Right. And that's hard because a lot of people think once they start going down a certain way, like they're stuck.
Yeah.
It's like, no, you're not. You can pivot and make a better choice and go at a different path, that you're on right now.
Yeah. Okay. This is good stuff. All right, Ray.
Let's talk about breaking down monthly payments and what's actually involved in those.
Okay. So when you're thinking about your mortgage, right, and somebody's like, listen, I'm paying $2,500 in rent, right?
Correct.
And I want to keep the same, but buy. Like, what is that like in their mental math? Like, should they be thinking about, this is where my price point should be?
Yeah. So a lot of misconception is all they're looking for is, well, if I'm buying something like this, and they go online and they're searching for a mortgage calculator and they put in their price point and they see what market rates are and what they're putting down, your payment's $2,500. What it doesn't calculate are, well, wait a minute, are you buying a condo? Because if you are, you're going to have association fees. So that's part of it. And that's outside of your monthly mortgage payment. You also have, depending on how much they put down, if you have less than 20%, you're going to have mortgage insurance. That's another cost associated with the monthly fee. You're going to have your real estate taxes and your homeowner's insurance as well. So there's an extra 4 items that can be attached to just the principal payment. And then all of a sudden somebody's looking at a property online for $2,500. The reality is it's more like $3,500 once you add those fees in. So all of a sudden you got to, lower that.
Right. When it comes to though, like I always say, it's also not apples to apples comparison, right? Because at the end of the day, rent, you're just throwing that down the drain, right?
100%, yeah.
When it comes to your mortgage payment, you get tax benefits, you get a certain amount that goes towards your principal, which is what you actually own in the house, right? So is there like in your mind where it's like apples to apples, if it's $1,000 rent
versus mortgage payment?
Yeah, that would be like, all right, this is a more fair assessment.
It's hard because, the reality is no matter how low your rent is versus how high your mortgage can be in comparison, like still the mortgage route is typically the way to go.
Because of equity gain, all that stuff.
Yeah, especially right now.
Right.
I mean, right now, because of the slow release of inventory, we're back again. It seems like every year we're at this, but now it's to maybe the greatest demand for properties. You're going to see the appreciation percentage probably be the largest in like the last decade for people that are buying, that bought like in the winter. And now that people get under contract, all of a sudden in a year from now, it's like, not only did you gain appreciation of 5%, it actually is like 15%. It's like, how did I just make $100,000 in equity? So when you're looking at a rent payment of $1,500 versus a mortgage payment of $3,000 over the course of a year, the equity that you've gained plus the write-off, for the interest and on your tax returns, that all comes into play, and it's a no-brainer pretty much at 99% of the time.
Where do people get denied? Where have you seen the biggest places where people throughout the process are sorry, you can't get a loan?
So that comes on the upfront part where people didn't gather their documents and information about their situation. And they're submitting applications all done online, and they're not giving those documents to the lender to review. So buyers might think they make $40,000 a year. Well, yeah, if they work 40 hours a week, every single week, and never miss because they're an hourly employee. They're not a salaried employee.
Got it.
People don't understand that is a big deal. So all of a sudden the income that they say they have, we get it. It's like, no, you can't be approved for this property.
Got it.
It's, you got to go 50% less. And they don't understand that. So I think, again, it's making sure you have all your documents for a lender to review, because what you think you might make and what you think you might have, if you have Bitcoin, all of a sudden it's like, oh, I have all this Bitcoin that's now surging. Well, it's we can't use that.
Right.
That's a problem.
Would you say a lot of the times people misunderstand the income to debt ratios that they have? Because that is the biggest factor, right? It's like, how much do you make? What do you truly owe? And then that equates to your home affordability.
Yeah, especially with first-time home buyers that might not have that much credit, or maybe they have student loans. They've got on to college. They've been working for a couple of years. Student loans is like the biggest thing,
because they just kicked on last year too.
Right. So a lot of people, they don't have payments on their student loans because it's deferred for 3 years. I mean, they push that for another year.
Right.
And it comes up on their credit report and shows that there's no payment. The problem is we have to do a calculation of that, of at least a 0.5%. With Freddie Mac, or 1% with Fannie Mae. So that is something that is not taken into consideration. Also, they might be on a credit card of their parents that they got, and they might not be an authorized user, but they actually might be on the credit card.
Right.
And it's like, well, you have this credit card that's has a $400 payment, and you're not an authorized user. You're actually on the credit card. Well, but this is my parents. Well, that's a problem. So a lot of times it's the combination of the income and not knowing your debts, which is important on why we do a pre-approval and pull their credit to actually see what they have. Because a lot of times they don't know what they have, or they think they know, but the reality is it's completely different than what they thought.
So this is a good question. A lot of people are really nervous to get pre-approved because they're like, I don't want my credit to get hit. What is the difference between a soft pull and a hard pull?
So a soft pull is essentially, it's not going to hit their actual credit score. It's not going to bring down their credit score.
Why?
Because it's, I don't know why. But it's because it's not hard.
I don't know why either. Why can't I get this fucking answer, dude? I was so excited. I'm like, finally, I'm gonna find out this like magical information.
The reason is because it's just not hard.
Yeah, it's just not hard.
I mean, when it's soft, it's soft.
It's super soft, man.
That's why.
Cut. We're good. Now, that being said, right? What if they go to 5 different lenders and they get pre-approved from 5 different lenders on 5 different days throughout the week? Are they going to get crushed on their credit?
So no. So that's a misconception. When somebody gets their credit pulled, a hard pull from, let's say, a bank that they bank at, and they get the credit, and then they want to speak to different lenders, but they don't want to do an application because they don't want to get their credit pulled, and they're worried that the credit score is going to drop. It's not true. So in a 30-day window, the first person who pulls that credit report for the purpose of a mortgage, they have the next 30 days, they can repull which we don't want this for your clients to go to 8 different lenders.
Of course.
But they can repull their credit 1,000 times plus, as long as it's coded as for a mortgage only, and it will be the same exact score as that initial pull from that first person that they went to.
Okay. You guys do something really interesting. You guys do credit repair.
Yes.
So that is an incredible service you guys offer, because you know that the tactics, because a lot of people that have hit credit scores, like it's usually like over some silly stuff, right?
Yeah.
But a lot of people are nervous because they're like, well, my credit score is low. What are those things that you guys do to look into to be able to get their credit up quickly?
So a lot of times it can be something like a collection that shouldn't have been, usually medical related. Could be a missed credit card payment. Could be something from the past that maybe it was something in a bankruptcy they had 10 years ago, but for some reason it's still showing up. So depending on what it is, we can go through and we have a software that's linked up with the credit bureaus, and we can actually analyze and look to see, well, maybe there's 3 things that are bad on their credit: collection, derogatory, credit card, and or just paying down a balance. Maybe it's just because they have a $300 Best Buy card and their balance is $200, and it's not that much, but because of the utilization of that maximum limit, their credit score is 50 points less than what it should be. It could be that simple.
Wow.
So it's like, hey, all you gotta do is pay down your credit card $150, and all of a sudden you're going to gain 30 points.
So a lot of people think, though, that it'll take 9 months for my credit score to, like, how quickly are you guys getting people's credit score up?
So we pay internally, we cover this for our prospective clients. We pay for that cost. There's nothing to them, but we can get in little as 24 hours. Something could be updated on their credit report. And it could be, it's so significant now because of the rule changes regarding loan level pricing adjustments and interest rates. It is a huge difference between a 720 FICO score, which is not bad, but it's now considered like average.
Right.
To that of somebody that has a 780 score, we're talking at least a 0.5% difference in interest rate.
That's crazy.
So if somebody's got
so much money
like
on a monthly basis,
they don't understand that they have a perfect payment history, they have no credit card debt, and then all of a sudden they get their credit, and it's like, why am I like a 725?
Right.
Well, when do you pay your credit cards? Well, when the balance comes out on the statement, we pay it right away. Like that day we pay it. What they don't realize is that when that statement's produced, that's what gets reported to the credit bureaus once every 30 days. It's not live. It's not every day it's being updated. So what we do is, okay, well, first of all, know that you have to pay your credit cards before
due date.
The statements come out. So always program your auto pays 2 days prior.
Got it.
So then when the statement comes out, it's at 0 or close to 0.
Got it.
And then in those situations, we can go ahead, have them pay it, and then we can get their credit automatically updated within, 1 day to 5 days tops, instead of waiting another 30 to 45 day window.
I mean, it's super powerful. Like, you did this for my client last year, remember? And we started with, like, listen, like, you looked at their credit report and you're like, and he was between you guys and a big bank. And you're like, listen, this is where it is now. But what's going to happen is that by going and getting this done, within 30 days, your rate's going to be this. And he called me, he goes, Greg, are these guys legit? Like, I mean, is it serious? I'm like, it's legit, man. It's going to happen. And you blew his mind because you did such an above and beyond service, right? That, like, a big bank's just not going to do. They're going to be like, this is the rate. Good luck. Like, but you guys are like that. That's what I'm talking about. It's like that, like, full on, full offense. Let's get you to the best rate, and let's work with you to get there. Like, that is the relationship we're talking about.
Absolutely.
That's right.
Oh,